The dividend giant AT&T reported third quarter results. Let's look at what the figures revealed and if that changes my recommendation on the stock, changing it from a buy to a hold or a hold to a buy. So let's get right into it. Slow and steady growth for this dividend giant in the third quarter. Adjusted revenue increased to 30 billion in Q3. That was up from 29.1 billion in the same quarter last year. Net phone subscriber additions of 708,000 was truly impressive, and fiber high-speed internet additions of 338,000. Impressive growth for this relatively slow growing business. Adjusted earnings per share of 68 cents was up from 62 cents in the same quarter last year. Several adjustments were made both on the top and earnings side to put the comparison on equal footing with the same time last year, because if you are not aware, AT&T is sold DirecTV, an underperforming unit, and so now it didn't have the revenues from that unit this year. So we adjusted the figures to compare it with the same figures last year to make it comparable. Free cash flow of 3.8 billion in Q3 was the same as last year, relatively flat. The sale of DirecTV, like I mentioned earlier, is adding 1 billion to free cash flow. And in my opinion, this was a prudent play selling this underperforming division. Folks are canceling this type of cable subscription or satellite subscription and choosing to stream their content instead. Streaming offers consumers more convenience and lower prices for the most part. More convenience because you don't have to have your service only where you have the connection, right? So with DirecTV, you can only watch it for the most part where it's connected, either in your home or your home office. But with a streaming connection, you can have it on your phone. You can watch it wherever you get internet access. So extremely more convenient. And also, you can get that subscription started with just a few clicks. You don't need to have a professional installer come in to install your streaming TV connection. So millions of customers have been canceling and switching to streaming services over the years. According to eMarketer, they expect this industry to continue losing consumers by the millions over the next few years. So in my opinion, it was a good decision to sell this underperforming unit, and hopefully by shedding that unit, AT&T can return to consistent top and bottom line growth. The dividend giant has committed to paying roughly 8 billion in dividends this year in 2022, and that's well supported by the free cash flow that's on track for 14 billion in 2022. That's great news because you don't want a company paying dividends in excess of the free cash flow that it's generating, because in that scenario, what the company is doing is paying the dividends either out of its savings or it's borrowing to pay that dividend. Either way, it's unsustainable to pay dividends in excess of free cash flow or in excess of earnings, because that's a sustainable source of dividends payment. So good news for investors that are invested in AT&T stock for the dividend. It's a healthy dividend. Last I checked, the dividend yield was over 7%, and seeing as the free cash flow supports it, investors can expect this dividend to continue for the near term. And so to close this earnings review, I will say that AT&T is one of the stocks that I recommend as a buy. It's trading at a relatively inexpensive valuation. It's got healthy earnings. Revenue is now back to growth, adding subscribers. So I don't see any reason to change my recommendation from a buy. I would still recommend AT&T stock as a buy, especially if you're a dividend investor, if you're an income investor, if you're looking for passive income. AT&T stock is an excellent source of passive income, and you can expect these dividends to continue for several years because they've got healthy free cash flow. So that's my earnings review. If you're looking for a stock that generates healthy passive income, AT&T is an excellent one. If you want to watch my video discussing why AT&T stock is a buy, I will link to it at the end of this video. So if you're going to watch that, I'll see you over there. Thanks for watching. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.